Damn good morning, crypto fam. Welcome back to the Crypto Dam, where we break down the market moves that matter. Today, we're diving into some major institutional developments, from oil-rich investors flooding into Bitcoin to Standard Chartered partnering with Coinbase on institutional infrastructure, plus some critical volatility warnings you need to hear. Stick around. I've analyzed 3 coins that could benefit from these developments, and I'll reveal them at the end. Before we get into the main stories, here's a clue about my coin picks today. Institutional infrastructure plays a major role in my analysis. Keep watching to find out which coins are positioned to capitalize on this shift. Let's jump into the news. First up, reports that oil-rich investors are fueling Bitcoin's next liquidity wave. This is fascinating because we're seeing a major shift in how petrodollar wealth enters the crypto market. These investors aren't buying Bitcoin through back channels anymore. They're coming in through regulated ETFs and institutional products. This matters because it's deepening market liquidity while completely reshaping the structure of who owns Bitcoin and how they access it. The era of institutional crypto adoption is accelerating faster than most people realize. Next, Bitcoin's extreme low volatility period may be ending, with analysts now targeting $50,000. Now, before you panic, this is actually about a breakout from the current tight range around $90,000. Traders have been watching Bitcoin stick to this narrow channel for days, and historically, these compression periods end with significant moves. The data suggests a major price action is around the corner. Remember this. It's crucial for the analysis coming up. Now for some macro headwinds. Macro analysts are warning that Bitcoin could dump below $70,000 due to hawkish moves from Japan. The Bank of Japan is expected to increase benchmark interest rates on Friday, and historically, this has been bearish for risk assets like Bitcoin. When Japan tightens monetary policy, it strengthens the yen and often triggers deleveraging across global markets. This is a real risk factor to monitor over the next 48 hours. Shifting to institutional developments, Standard Chartered and Coinbase are deepening their alliance to build institutional crypto infrastructure. This is huge. They're expanding their partnership to develop trading, custody, and financing services specifically aimed at institutional clients. This pattern, I've seen it lead to opportunities before. When major banks start building serious crypto rails, it signals where the smart money is flowing. This isn't speculation anymore, it's infrastructure. Here's an interesting regulatory story. Hashkey is planning to become Hong Kong's first crypto IPO. This puts Hong Kong's virtual asset regime on full display, testing whether compliance-first crypto platforms can actually win over traditional investors. And if this succeeds, it could open the floodgates for other crypto companies to go public in Asia. Keep this in mind for the coins I'm about to discuss. On the corporate side, 21 Capital's first-day trading slide highlights investor caution toward Bitcoin-backed stocks. The company's NYSE listing showed how tightly markets now price Bitcoin-heavy firms. Investors are refusing to pay much premium beyond the underlying Bitcoin value. This tells us the market is getting smarter and more efficient at pricing Bitcoin exposure. Let's talk cycles. An analyst from Tenx Research says Bitcoin's 4-year cycle is still intact, but it's now driven by politics and liquidity rather than just the halving. Marcus Thielen argues that elections, regulatory shifts, and macro liquidity are the new drivers. This is a critical evolution in how we need to think about Bitcoin's market structure going forward. And finally, XRP bulls are gaining ground with ETF inflows continuing their streak. Spot XRP exchange-traded funds recorded over $20 million in inflows on Friday, marking 19 consecutive days of net inflows. Social sentiment is also shifting bullish. This shows how ETF infrastructure is changing the game for altcoins, not just Bitcoin. All right, coming up next, my 3 coin analysis based on everything we just covered. Based on today's news and market data, here are 3 coins I'm watching closely. First, AAVE. I'm analyzing AAVE because of the institutional infrastructure development we discussed with Standard Chartered and Coinbase. When major banks build crypto trading, custody, and financing services, decentralized lending protocols like AAVE become increasingly relevant. The data shows AAVE sitting at a market cap rank of 53 with a current price around $191. Volume is at over 2 million in 24 hours. From my perspective, as institutions need DeFi exposure for their clients, Aave's established lending platform positions it as a bridge between traditional finance and decentralized finance. This is what I'm watching. The institutional infrastructure story directly supports DeFi protocols that are already battle-tested and liquid. Second, AVAX. Avalanche is interesting to me based on the broader institutional adoption trend. Source #1 we saw with oil-rich investors entering Bitcoin through regulated channels. What the data shows is AVAX trading at $13 with nearly 4 million in daily volume, ranked 31 by market cap. My personal take is that as institutional money seeks crypto exposure beyond just Bitcoin, Layer 1 blockchains with strong infrastructure and institutional-grade features become attractive. Avalanche has focused heavily on enterprise adoption and subnet technology. I find this interesting because the same regulated rails being built for Bitcoin can extend to other chains, and AVAX has positioned itself well in that narrative. Third, Unify. This one connects to the liquidity story about oil-rich investors fueling Bitcoin's next wave. Unify is trading at around $12 with impressive volume of nearly 10 million in 24 hours. Based on the data, when new liquidity enters the crypto market, especially from institutional sources, it doesn't just stay in Bitcoin. It flows into the broader ecosystem. I'm observing Unify because of its volume profile and potential to benefit from this expanding liquidity pool. The oil money to crypto pipeline we discussed creates opportunities across multiple market segments, and this is one I'm monitoring closely. So there you have it. 3 coins I'm analyzing based on today's institutional infrastructure developments, liquidity trends, and market positioning. AAVE for the DeFi institutional bridge, Avalanche for Layer 1 institutional adoption, and UIFI for liquidity expansion play. Remember, this is my personal analysis based on the data and news we covered today. Always do your own research before making any investment decisions. If you found this analysis valuable, smash that like button, subscribe for daily market updates, and drop a comment below telling me which coin you're watching and why. I read every comment. This is the Crypto Dam, and I'll see you tomorrow with more market insights. Stay sharp out there.